Gold stocks fell to their lowest levels in 6 weeks as investors focused on debt problems in Europe and the United States. U.S. markets were closed for the Thanksgiving holiday, but in Asia, Louis Wong at Phillips Securities says higher risk for European bonds sent markets sharply lower.
And on top of that, the failure of the super committee in the U.S. to reach an agreement on the budgeted reduction also doesn't bode well for the Hong Kong market.
In Strasbourg, France, leaders of the Eurozone's 3 largest economies met Thursday in a bid to shore up flagging confidence in the euro. The meeting comes after an offering of German bonds failed to attract enough buyers. Economist Rob Dobson says a manufacturing decline in Europe's strongest economy is adding to worries.
We're looking at Germany heading towards stagnation, not quite there yet, but again, we'll need to see services holding its ground and maybe manufacturing holding its ground at these levels.
In China, the Purchasing Managers' Index, a gauge of future manufacturing activity, hit a 32-month low in November. Bank economist Torge Middendorf says a slowdown in the world's fastest-growing major economy increases the risk of a global recession.
We already saw a weak PMI numbers from China today, which confirm our view that the world economy is slowing.
Despite a stream of negative data, retailers are cautiously optimistic as the U.S. holiday shopping season kicks off. Ellen Davis at the National Retail Federation expects more than 150 million shoppers will take advantage of deep discounts on Friday as retailers entice consumers to shop early.
We're still uncertain on how the holiday season will play out. There's a lot of time left between now and the end of December, but momentum seems to be fairly good.
Davis says U.S. retail sales have risen consecutively for the last 16 months. But economist Beth Ann Bovino at Standard & Poor's says many companies are scaling back.
They're worried about what's going to happen with the holiday season, and they don't want to keep a lot of excess inventory on the shelves because they're going to have to sell them at discount rates if they don't go during the holiday season.
Consumer spending accounts for about 70% of U.S. GDP. Economists say a slowdown in American consumer demand adversely impacts countries that export goods to the United States. Arcega, VOA News.